So today we're going to make a video talk about the mentality at the moment, the fear that's out there and everything like that. So I hope the video is useful, and I'm sure when I start talking about a few of these points, you actually think, oh, I've noticed that couple of points happening in the stock market. And in general, I've seen just so much fear out there in the stock market, in the retail space, with it being on YouTube comments. I've got quite a big advantage because I have 2,000 people that can watch the videos every day, and I've noticed the difference between where we were at 12 months ago to where we're at right now, and the negativity and the fear out there in the stock market is something more than I have ever seen. And you can understand the reason why. Even though the indexes are down, probably hitting bear market territory, there's a lot of stocks that have lost so much value, and a lot of people are looking at that in fear. There's a lot of negativity out there. The stocks are just going to carry on going down forever, and we're going to talk about that today. Now, there's two stocks in particular what we'll talk about in a few minutes time, which I've seen a lot of fear on. I'm going to use them as examples, but there's a lot of other stocks that you could use in general. And the big clear thing that I've noticed, the change in the last 12 months, is that everyone's a long-term investor in a bull market. You look at a bull market, a few months ago that we were in, as we were going just up and up and up every day, everyone goes, yeah, of course I'm a long-term investor, I'm holding this for the long term, it goes up and up and up. And now that we have a stock market that's going down, we're starting to see people trying to time the market, trying to jump in, trying to jump out, thinking, oh, it's only going to go lower. I'm not going to buy the dip. And the same thing applies, is that a few people that were buying stocks, a few months ago, when they were looking at these certain stocks and going, oh, I wish I had this stock had a 20-30% dip. I'd love to buy more shares in it. If this ever had a dip, I would go and buy shares in it. And now that we're actually at the other end and we've rotated from a bull market to a bear market, what's happening? There's only a certain few people that are starting to follow up with that and are buying them dips, and you can see who has actually got a long-term game plan in some of these stocks and who were buying stocks just because we were in an uptrend, which is very interesting to see. And like I just said a minute ago, the amount of times that I've seen so many people that would go, I would buy the dip if this dips, and we've had so many stocks, you can have there's loads of stocks out there that you want to pick from. Even if you think some of my stocks you don't like my stocks, there's plenty of other stocks out there that have had massive 50+% dips in the share price. And the amount of times that we saw people saying that I would buy the dip if this stock went down, and now we're actually starting to if that's starting to happen and that stock is losing value, the amount of people that are actually deciding not to buy that dip now is quite scary. And that is the big thing. There's the biggest emotion or the most controlling that will affect your judgment is fear. There's euphoria, which we had, through November, December, January, February of 2021. And now when the stock market goes down so quick, you're hit with fear of I'm just going to go down on this, or, this stock I don't know if this stock is ever going to recover. I don't know if I want to buy that stock, or the kind of, okay, this stock's at 52 week low, this is a bad stock now, I don't want to own it, rather than seeing that as an opportunity. And that could be a good opportunity. Only 12 months ago you might have seen that stock at 52 week highs and you would have thought, okay, I want to buy that stock, and now it's at 52 week lows. The only thing that's changed is the share price. Nothing has really changed with the company. And you can see now who has actually looked at a lot of these investments, a lot of these stocks they're buying, and actually studied the business model and gone, okay, I think this is what they're going to do numbers wise, and somewhere in the next few years I think it will be valued in this sort of range. And you're noticing who's actually just gone, okay, that share price is going up, there's a lot of talk about it being pretty good, I'm just going to buy that stock. And that's the big thing that you're starting to notice within the last few months, and that's what's caught a few people out. And I think the people that have that fear of buying that dip are the people that have done that and don't know what they're buying. A lot of people that know what they're buying, know what companies they're buying, and have a pretty good game plan, is you're going, I could go down a little bit more in the short term of that, but you know what, this is at really good valuations, and as long as the company keeps doing what it's doing, that share price will recover when we when we rotate again and go into a bull market. Just when we were looking at February 2021, at them top times you were looking going, is there actually ever going to be a bear market again? And now we've hit a bear market. You're in that system, that way again of going, okay, are we actually ever going to have a bull market again? Which is crazy, because like I said, only if you go back a year ago, you would have never thought we would hit a negative market. And now we've hit a negative market. There's a few points where you do look at it and go, I wonder if this is ever going to turn around again. And that's the cycle of the stock market, and that's that kind of fear emotion taking over and thinking, I don't, are we ever going to see any green days again? And that's what we have right now. But at some point, a lot of these stocks will rotate back into favour. And if you look at a lot of the share price drops, these are going to be, pretty good buying opportunities. Now, there's a story in One Up on Wall Street by Peter Lynch, which is definitely worth reading. If you haven't read it, I'll put a longer version on the screen right now. But basically, that story from Peter Lynch in One Up on Wall Street talks about the cocktail party. And Peter Lynch basically goes on to say that when you're at a cocktail party, if everyone's talking about stocks, if your gardener's recommending you what stocks to buy, that's normally the sign of a peak market. When you're at a cocktail party and you're there and you say you're a mutual fund manager, you're into stocks, and nobody wants to talk to you, no one wants to invest into stocks, everyone says, oh, stocks are risky, that's normally when you're at a downtrending market, and those are the times that you should be buying. And it's always funny that that happens, that everyone is always interested in stocks when you're at all-time highs. When people are saying, oh, I don't want to get involved in stocks, stocks are risky, that's normally when stocks are getting to the all-time lows and you want to be buying. And that's the kind of wrong mindset that we have at the moment. And that's just in general. It's not just, people that are in the stock market, that's people outside the stock market that have that mentality. And it's funny how that works. I've seen that personally from doing the YouTube side of it, is that when my views were at all-time highs, it was February 2021, and that was when the stock market is all-time highs. Now views have kind of dropped off a little bit, and what do we have now? We have loads of stocks that are sold off, and those are probably the times that you'd be buying. And it's the same for like the private group that I do on Patreon. It's like, when was the biggest amount of members that were joining that group? It was in February 2021. What was happening? Stocks were at all-time highs. And what's happening now? The growth slowed down a little bit. What's happened? Well, the stocks are at all-time lows, and that's the problem, is that it should really be the other way around if you want to be successful in the stock market. And until you kind of get that mentality and you understand that, when the stocks are at all-time highs, you probably want to be selling. When the stocks are down low, you want to be buying. That's the kind of the mentality that you want if you want to be successful in the stock market. The people that don't do well in the stock market are the people that do what we just said, that when stocks are at all-time high, get interested in the stock market. And when stocks are at all-time lows, that's when they don't want to talk about it. That's when you want to sell out. That's when you don't take an interest, but that's when you want to be buying, which is a very interesting point of view. And that all leads on to two stocks in particular that I've talked about in the last few weeks, which has kind of led me to make this video. Now, if you disagree with these stocks, maybe one of them you might not like, but I'm seeing this sort of pattern with a lot of stocks, but these two in particular are very different businesses. And I think even if you don't like one of the businesses, you should like one of the other ones, I think, because they're both, good balance sheets, they both have good revenue growth, they both have good profit growth, they're in different industries. And two companies that I've talked about are a company called Catebox and a company called Boohoo. Now, when I've talked about them companies, and there's a few more that I could put on this list, but I've gone with these two because probably the two in particular that I've noticed this. I've seen a lot of people talk really negative about Boohoo and also Catebox. Now, if we just take Catebox for example, Catebox is a stock that through 2020, 2021 had 2 years of being on a massive bull run, and I bought a few shares in that business, and it did really well. But at the moment, the share price has absolutely fallen off a cliff. Now, with that share price falling off a cliff, I've seen so much negativity about that now being a bad business. I saw no negative comments about that being a bad business prior to the drop. I saw no negative comments. And that's people reacting emotional off the share price rather than looking at that share price as going, a bit like the Peter Lynch situation, and thinking, okay, maybe I should be buying right now. And in fact, when that share price was going up, all I saw people do is comment and going, you know what, if that stock ever had a 20% dip, I'd buy the dip. I would buy a bit of a big position in this one. And now it happens, people are going, oh, I don't know if I want to buy that. Actually, it's a bad business. And that's exactly the kind of mentality that we're actually on about here. And the same with that company, rather than look at that business and going, okay, you look at the metrics of this company, you look at the company's now valued at what it was, 2, 3, 4 years ago. And all that's happened is the financials have moved in the right direction, and they'll carry on moving in the right direction. Maybe this is a good buying opportunity. I'm buying this at a cheap valuation. I get a 4% dividend yield. Is this a really good opportunity that I should be buying? And it's looking from that point of view of thinking, okay, historical low valuations, profit's going to go, revenue's going to grow. Low metrics that it's ever been. Maybe I should be buying this stock. Look at it as an opportunity. And for some reason, people reacting off the share price, suddenly it's become a bit of a bad business. The same happens with Boohoo. I've seen so many people, being negative towards Boohoo, but even though it's, it's the cheapest valuation it's been since 2016. There were no negative comments about Boohoo previously as it went up, as it went to £4. But all of a sudden now, because it's fallen off in share price, it's a bad company now. Rather than looking at that and going, okay, is this drop now an opportunity? Should I be buying this opportunity? It's the lowest metrics ever been since 2016. The revenue's still moving in the right direction. The profit's going to move in the same direction. Do I buy that opportunity? But for some people, they look at that in fear and go, oh yeah, it's a terrible company, it deserves a drop, that's why it's so much, rather than looking at it the other way around, which is really important, what you want to be doing. And it's not, you know, you look at these stocks like a Boohoo and a Cake Box, and if you generally think that these share price drops are because, you know what, this is going to be the end of Boohoo, fair enough, you know, you don't buy that investment. And you look at the drops in like a Cake Box and you go, okay, you know, I think this is it, this is the peak, it's going to fail from here. Fair enough, you don't buy, you know, that investment. But there's so many out there at the moment that you've got to look at a few of these drops and think, even if you get like, you know, 7 out of 10, 8 out of 10, 8 out of 10, you know, if you get 8 out of 10 right of these stocks that are dipping at the moment, you're going to be laughing, you know, you're going to do really well. And when you are buying a lot of these stocks that are at the lowest valuation since 2016, there's a lot of, you know, reward to risk here. You know, when they're at these sort of valuations where they're at right now, the reward to risk is so high that potentially, even if these companies don't even, you know, what is the likelihood of something like, say, a Boohoo, for example, a Boohoo that's grown revenue at 20-30% every year, slowly growing that profit with it as well, but obviously it won't grow as much because it's a growth company, but the profit and revenue has moved in the right direction. What are the chances that right now that stock is just going to, you know, totally flip and fall off a cliff now? I mean, they're very slim. Even if the company is nowhere near the, you know, the revenue growth and the profit growth that it did, you know, 4 or 5 years ago, but it still moves in the right direction. You know, it doesn't grow at 20-30%, it grows at like, you know, 5-10%. Even if, worst case scenario, that drop off happens, which I don't even think it will happen, but let's just say it does happen, you've got to look at these metrics and go, even if that happens, is this still going to be a really good buying opportunity, considering that this stock is now valued at, you know, what it was 5 years ago, and looking at them sort of opportunities. And like I said, I'm not making this video to kind of stick up for Cake Box or Boohoo or anything like that, but I'm just seeing like so much fear to so many stocks out there that, you know, there's, you know, hundreds of, maybe even thousands of stocks at the moment that are, you know, sold off, you know, 20, 30, 40, 50%. Clearly, all of these stocks are not suddenly going to go bankrupt. Out there is stocks that are dipping that are going to be massive opportunities. And if you get 8 or 10 of them right, 8, 9, 10 of them right in the next few months, you'll benefit from that in the next few years. So rather than looking at this dip in fear, and like I said, I don't want to make this video about Cake Box or Boohoo, but I just wanted to use them two in general, just from, you know, the point of risk to reward and the valuation point of view, is that 8, 9, 10 of them stocks, if you get them right, all these stocks that have dipped at the moment, there isn't a problem with all these stocks. Maybe 1 or 2 deserve it, maybe 1 or 2 they've peaked out and they'll never recover. But as long as you get 8 or 9 of hundreds or thousands of these stocks that are on a massive dip at the moment because of the pressures that are going on, the short-term macro events that are going on, you'll benefit as long term. And this is really where it comes to a stock pickers market. This is where it kind of comes to the Peter Lynch situation, the cocktail party, where you want to be buying these stocks. And I'm seeing so many people look at these opportunities now in fear, and you don't want to be looking at them in fear. This is where the money is made at the moment, and you want to be capitalizing on them. So yeah, I thought I'd just talk about that. A bit of a mentality video. Hope you enjoyed it. A bit of an education video. If you did, hit the like button if you're new, subscribe, and I'll see you next video.